Rice is our distinguished guest. He's an entrepreneur and venture capitalist, and he's founded or backed dozens of young companies over his career in the technology, clean energy, media, and financial services sector. He was an integral part of Barack Obama's presidential campaign, and he also publishes regular health and wellness podcasts. So a very well-rounded individual. Thanks for joining us, Zeb. He'll be chatting with FinClear CEO David Farrell. He's got more than 30 years experience in financial markets and has worked building and managing companies in Australia, Asia Pac and Japan. So take it away, guys.
Thanks, Kristen.
Thank you very much. Thank you very much, Kristen. And welcome to Zeb, and welcome to all, hopefully some listeners, and for later on to listen on the recording. Thanks, Zeb, for taking time out to chat with us, obviously. And first up, a little bit of disclosure. So Zeb and his fund, King River, are a shareholder in FinClear. And actually, this is a great opportunity to talk to Zeb, because normally, or for me to ask questions of Zeb, because normally it's Zeb asking me questions about FinClear. So he's on the other foot, so to speak. So looking forward to having a chat today. But look, let's get straight into it. First up, Zeb, you've obviously maintained successful private equity firm specialising in technology through a number of corrections. I don't necessarily like to refer to crashes so much, but more as corrections. You know, what sort of insights can you give us about that from your perspective, and what can we expect happens next?
Well, I can really only speak to the sort of market that I invest in, which is venture capital and technology startup land. I would be not an expert opining on sort of the market more broadly, but I think what we can expect to see based on investing in through the 2001 crash and the 2008 correction, as you like to call it, is a continued wave of investment and a continued wave of innovation. And it feels like oftentimes that, you know, the world's ending and people are very skittish and scared, but some of the most extraordinary companies have been founded during those times. I'll just share my screen. Actually, I was just looking at this. Can you see that?
Yeah, that's great.
So if you look at in the last recession, just to take that as an example, companies that we've all heard of, like WhatsApp and Dropbox and Slack and Square and Pinterest, you know, they were founded either during or just after or just before the so-called, you know, global financial crisis. And so that's one thing that I would say is, you know, it was predictable, is that those companies will be created and funded through this kind of a cycle.
And reading some of your material previously, you've said, you know, tech behaves very differently during recessions to potentially, you know, other sectors and other periods. Can you give us perhaps a little bit of insight around why you think that?
Yeah, I mean, I think that it's particularly with this crisis, you know, we're seeing that behavior being different. So there's a few different parts to answering that question. The first part is, in this recession, as everyone's seeing, you know, e-commerce, people are buying more online, and having to use Zoom. I heard the CEO of Optus just in the first few days, I think week or so after the lockdown went into effect a couple of weeks ago, the CEO of Optus Australia remarked that the Zoom traffic had increased over 1,000% during that period, and I think that's probably gone up even more, right, since then, as our interaction is evidencing, right, and so I think people use more, and then but what happens is that there's long-term changes. People will become more used to using the new technology. When I think about my parents, for example, who are in their 70s and 80s, late 70s and 80s, and they're like Zoom experts now, hosting, you know, calls with the, you know, 15 grandkids and cousins, and, you know, muting people and doing the backgrounds, and like they're, you know, got the 80-year-old doing that. Of course, you know, their face is like this for half the time, but
yeah, right. I spend half my time, I think, looking at my father's ear.
Yeah.
You know, rather than hold it like this, he puts it up to his ear, and
Exactly.
I get a great inside view of his ear.
Yeah, exactly. So, you know, but even then, you know, they're starting to figure that out. So I think that's one thing that is different, is that people will use more technology, particularly in this recession. But it's happened as well in the last two, is that when there's economic crisis, people are looking for productivity improvement, for innovation gain. Unemployed people are looking for, you know, where there's growth. And as I alluded to before, there continues to be growth. So that's another point, actually. I think I'll bring up another chart, actually. I think this is a really interesting point that's worth making. Let's see if I have it here. Yeah, so let's see if that opens. Can you see that chart?
Yeah, I've got it.
So what this is showing you is by year, the overhang of venture capital and private equity funds. And it's quite an extraordinary number. I mean, you're looking at almost $2.5 trillion of cash that funds like mine, King Rivers, have raised but not invested. And if you think about how private equity and venture capital works, you know, we go out, we raise a fund, a closed-end fund. We have, you know, 7 to 10 years typically to invest that money, and we get paid, you know, handsomely to manage that money. But we're not being paid to sit on the money. We're being paid to invest it. And so, sure, there might be you know, a few months when things get kind of scary and quiet. But what you see is, if I can show you another chart here, this is the same kind of a data. Ignore the well, there's two numbers here. The darker color is the number of funds, like how many individual funds were raised. So like King River Fund 2010 to 2019 fund is one fund, and then we might raise one in 2021. That's King River 2021 fund. So those are the number, the big bars, and then the amounts you can see are the actual dollars raised. I don't have it through 2020, but what you see here is that the lower bar is the amount of cash that was raised. So in 2007, $413 billion was raised. In 2008, $408 billion was raised. Obviously, the funds fell, the amounts raised fell, and the funds raised fell, but not by as much as you'd think. And then this is the point I wanted to make here, which is this is quite extraordinary, because in 2001, you can see, and then 2002 and 2003, there was a massive collapse. This was the dot-com crash, where you went from, this is dollars invested in startups. So, right, on the one hand, I've been talking about dollars raised into funds, and we're paid to invest the money. But if you look back at the chart I just showed you a moment ago, and you look at the money raised in 2000, it was a lot of money, but the overhang was something like you know, $500 billion. Whereas today, the overhang, as we were seeing here, is $2.5 trillion, which is closer to the $1.5 trillion that was overhanging back in 2008, 1.4 trillion, 1.382 trillion. And so what you see with these later numbers here is, in 2008, this is the most fascinating contrast. The financial crisis hit, and yet the private equity and venture funding didn't fall that much. And versus in 2000, it was a collapse. And I think that's because there was triple the amount of dry powder in these funds. And so you had triple the amount of dry powder, and the funding of startups didn't fall that much. Whereas if you look at today versus back in 2008, when there was 1.4 trillion of dry powder of cash, you know, in these funds to be invested, today we have 2.4 trillion, as I showed you a moment ago. So back to your question, I think that what's different about technology is that there's all these people paid all kinds of money to put dollars to work. I mean, I've just read in the last week Index Ventures, I think, raised $3 billion, and Insight Ventures raised $9 billion. And there's just in the last week, there's been like three or four or five announcements of, you know, really famous venture capital firms raising billions of dollars. 100% of that money is in cash. I mean, our fund, the majority of our money is in cash. And we're looking at extraordinary businesses, you know, amazing companies. FinClear is a great example of companies that are thriving in this environment. And that's when the technology companies have an advantage, right? You have these big incumbents that have all these inherent advantages, and then you have these younger businesses, you know, healthy, growing, innovative companies, again like FinClear, that are doing something different. And the bigger incumbents typically have an advantage because they're sort of known. But in the technology sector, when you have an innovator that's coming along offering a better product or service at a lower price, more efficient, you know, whatever it is, that's when people are going, you know what, I can make a change because I don't have a choice. I need to save money. And you know, I think that you know, we're seeing, just to give you a few examples. Well, I'll stop there actually, because I know you have some other questions, so I could go on.
Yeah. So I mean, that's great. So you know, I'm hearing obviously some great companies have evolved out of difficult periods, and we saw that list. I'm hearing an enormous amount of gunpowder out there, and if I look at that graph, the thing that strikes me is you know, 100% up pretty much on just pre-GFC 07, 08.
Yeah.
So enormous amount of capital potentially to be deployed to the right companies. So, you know, it'd be remiss of me if I didn't ask, I mean, what do you think some of those opportunities are? You know, where are they? What are you looking at? What particular sectors are you excited by?
Well, again, I can't speak to public markets or like the economy more widely, but I can answer that question in terms of what I'm looking at, or my King River, what we're looking at. And there's a few areas. So one thing we're seeing is, you know, no duh, e-commerce is booming. I mean, we're looking at several companies that have exposure to that in a few different ways. And they're seeing month on month, you know, 20, 30, 40% month over month growth, you know, Jan, February, March, April. And so that's one that seems to be doing really well. I would say another area is companies like FinClear, frankly, that are, you know, bringing to market a product that is dealing with, it handles financial markets and can handle volatility and scale with the volatility because they have a technology base without falling over, without costs going up, and provide that steady, full technology solution in financial markets. So that's another area we really are excited about. I'd say a third area is actually probably, well, actually, I'll save that one for last because that's probably the most interesting. I'll just hit a couple other ones. So we're seeing stuff with, you know, fitness, remote fitness. So people that are intermediating and helping people find remote fitness and rank it, or AI around instruction and music for working out on your own. So that's another area. It's kind of like people working out on their own. And technology like Peloton is kind of like the obvious example of that. But there's all these other companies, you know, Mirror and Fitbit's playing in there, and Nike's got stuff going on. But we're seeing technology companies kind of supporting or feeding into that ecosystem. So that's another area. I would say another area is people are spending way more time online in these places that have quote unquote user generated content, or UGC, social media, you know, gaming, you know, just places where there's chat boards or whatever. And people are stressed out and fearful. And so there's a lot more kind of angry, bad stuff happening. And so companies that can help the social platforms manage that. There's a lot of technology around that. So those are some really interesting companies in Australia and in the US doing that. And then the last one I'll mention, I mean, I could mention more, but just the last one I'll mention. So if you're interested, we can come back and talk about one or two other ones. But the last one I'll mention is in the healthcare area, and it's so exciting what's happening there. I'll just spend a moment on that because we really like the digital healthcare space. And one of the things that's been frustrating for us in America, at least, which is where we also invest quite a lot of our fund. I'm based here in Sydney, but in America, it's roughly half the market is government market, but the government is, because the federal government, they're very cautious, very risk averse, but almost more importantly, they have, because of the lobbyists at a federal level, it's almost impossible to make changes to how Medicare works. There's a lot more innovation happening at the local, state, Blue Cross Blue Shield, private insurance companies, private meaning publicly traded often, but private meaning non-government insurance companies. And so if you look at healthcare, there's so much innovation that's happened with AI, with telemedicine, with apps. There's just so many exciting businesses, multi-billion-dollar businesses being created before our eyes. And the thing that's happened in America that people may not have clocked here in Australia is that what we were expecting to take a generation to change, this shift of the government market to using tech and using telehealth and using virtual health and AI and apps. Donald Trump, not a big fan. He signed an executive order 2 or 3 weeks ago that said, okay, if you're on Medicare, if you're on Medicare Advantage, if you're on Medicaid, you can access telehealth, virtual health, no copay. We'll pay for it. The government's going to pay for it, telehealth. Now, that's great. Like, the lobbyists are being very quiet. So, that just went right through. And it took our breath away. We were expecting 10 years maybe for that to happen.
The change, the pace of change.
The pace of change, it's incredible. And so on the one hand, that's great. But like one of our investments, they're on the phone every day with the White House, the Center for Disease Controls in Atlanta, with the CEOs of the biggest telehealth companies in the United States. And one of these CEOs said, look, we used to have, we had tens of millions of patients that we would do laptop consultations, or we would intermediate that for the doctor's offices. And our average wait time was 3 minutes until a month ago. And in a matter of days, with COVID and the Trump executive order around telehealth, our average wait time is now 5 hours. And he said, we have people that are collapsing, being rushed to the hospital, and are dying while they're on hold with us. And he's like, we need AI, we need more tech. And so there's just a mountain of money and smarts going into solving this problem. And you see the Google Apple announcement probably we're going to have in a matter of days. It looks like a tracker. There's all kinds of privacy issues with that, but anytime your phone goes near someone else's phone that gets COVID, once the system notes that somebody had COVID, everyone's phone that had passed that person in 2 weeks will get an alert saying, hey, you were near someone that had COVID. So that's what I'm talking about. Like in our business, even in like crazy times and recessions, there's technology has moments of kind of huge opportunity, and healthcare is the area we're seeing the most exciting, the fastest, and the biggest changes.
Yeah, just amazing. I mean, it's the age-old adage, necessity breeds invention, and that's just extraordinary. And my wife will hate me for saying this. It's funny you brought this up. She just this morning, she'd rung her GP, and I won't go into detail. Well, actually, I will a bit. She had like a bit of a rash on her shoulder.
She's definitely going to kill you now.
She's going to kill me now. And she'd spoken to a GP, obviously couldn't go in. She's like, oh, can you just take a photo? I need to send it to my GP. He's going to have a look at it. Just this behavior, the way that we're changing
I had just another example of that personally. My son had an appointment, and the person he sees, I guess, is very busy or very disorganized, or probably both. And we typically wait 2 to 3 hours in the waiting room, which I've waited a long time, but never that long. But that's just what happens at that practice. And we do it now from home, and it's great. We got the Zoom open or whatever, and we can just go about our day. And that's a huge gain for us, in terms of our benefits in life, time back.
Hey, so let's hone in a little bit on Australia and get your thoughts about Australia and perhaps talk about wealth advisors, maybe how they're going to adapt and recover as quickly as possible. Do you have a view on the wealth sector? Perhaps some advice for some of our clients managing wealth sector, what they should be looking at or what some of the opportunities are.
Well, I would just pick right up off of what you just, the two examples we just gave. I mean, it's one of the words, the phrases we keep talking about in our office is lemons into lemonade. That's what we're looking for, is that people that are looking at this with a glass half full and saying, geez, my business is down, or it's hurting in X, Y, and Z. And then they're looking at technology, and they're looking at the opportunities that the distancing and the hardship create, and converting that into a kind of into growth for them. And it may mean that they suffer in the short term, but if you look, 12 months out, their business is going to be stronger and bigger because the old stuff's going to come back in all likelihood. But in the meantime, they've taken that, 6, 12 months, hopefully it's not longer, to throw all that free time and energy that they have from their business being down into getting comfortable with new tools, with new technologies, with new ways of making their clients' life cheaper, so that they're not waiting, or they don't have to travel as much, or that they get more access to better information technologically, whether it be reporting or trading, or any of the tax sort of stuff. I mean, I'm not an expert on the area, but that I would just draw that lesson from other sectors.
Yeah, it's amazing. I think when this hit, a month or two back, and we took a bit of a deep dive, a month or 6 weeks ago, and went, gee, what's going to happen here? Are we just going to not get engagement from clients? Our volume's going to drop off. What's going to go on? We've got this great pipeline of clients that we're looking to bring on, but hey, maybe given what's going on, we're not going to get that engagement. From our perspective, the last 3 or 4 weeks has been a real eye-opener. We're probably getting more engagement from our clients and potential customers looking to make change, looking to use technology, looking to use some of FinClear's tools and capabilities to advance their businesses. So it's probably the exact opposite of what I expected.
Yeah.
But if you really do dissect it, it's probably a natural progression. You've got people sitting around concerned about what's going on, a little bit more time on their hands to think strategically about what they need to do. And then you're getting better engagement from a strategic perspective and what tools and services you can offer them from a technology perspective to advance their business. So I find that a really intriguing dynamic. So you touched on a little bit before, and maybe this is a little bit of self-promotion on my behalf, but FinClear. When I think of FinClear, I talk about the business being a pipes and plumbing technology business, that we're integral to financial markets and providing services. And personally, I think that's obviously a great space to be in, and we've seen that the last few months, that our volumes have held up relatively well, albeit I expect them to tail off. And interestingly, the demand for our products and services and those looking to make positive change tends to be increasing. But from your perspective as an investor, anything you'd like to sort of call out and what you particularly like about FinClear?
Yeah, I think that the thing that's so exciting to us is that you guys have kind of built the full stack from end to end on the execution, settlement, clearing, trading side, and that's something that's unique. And everyone else might have a piece of that they've automated or digitized, but no one's kind of built the whole highway other than you guys, and connected all the pieces. And what that translate, okay, that's cool. Okay, maybe it's more robust, or maybe it's more elegant. But what does that mean for customers? What it means is it's going to be cheaper. It's going to be more reliable. It's going to be more scalable, right? And so the thing that we get really excited about in thinking about your business going forward is that you've built that pipe. It's almost like you've got the fiber optic or whatever cable, and everyone else is using like the old copper wire or something. And it's sort of, it's like a
I'll use that. Yeah, I like that a lot.
yeah, and so you you can then innovate in ways that you price your products, the services that you can offer your clients is just going to be disruptively different. And that's always what we look for in our technology investments, is that kind of disruption, that change where you can just, because you have a fundamentally different technology, you can think about things differently. Like, the classic example being the is it a zero? It's a fee, zero turnover brokerage, but percentage of FUM fee kind of a thing. So like that's a classic kind of innovation example.
Yeah, we see it as just taking out unnecessary layers of fees and costs that have evolved across the business over a long time.
I mean, custody is such an anachronism. It makes no sense in today's day and age that you need to do that. You can achieve the same results with the right pipes and plumbing without the additional cost. It's incredibly costly, totally unnecessary.
And importantly, from our perspective, it's straight to investor. So it's giving that digitization straight to investor, holding their own assets directly in their own name, and the efficiencies that provides is we think really important.
So look, we think that you're emblematic of that kind of change. But Australia, to your question about Australia specific, one of the things we love the most about Australia is the fintech innovation. And there are a lot of really interesting companies doing things around blockchain, around insurtech, around the trading architecture, around impact investing or clean technology funds management. There's all these different areas that or lending. There's also a bunch of really interesting lending tech businesses, neobanks. There's so much going on in this country. It's definitely one of the leading countries in the world. And why is that? Well, I guess I don't really know, but as an observer, it seems to me that you have an oligopoly in the banking sector with these big BMS earning outsized rents, underservicing their customers who are very unhappy, and it just creates that combination creates this enormous opportunity for innovators to come along and capture some of those rents. Yeah.
Hey, just quickly, in your portfolio, obviously you like FinClear, but which is great. But what other companies in your portfolio you think are going to thrive in this environment?
Well, we're fortunate. We have a number of companies. So we think FinClear, of course. We have another Australian fintech company, Cover Genius, which is one of those lemons in the lemonade, where they're I think they have a lot of their businesses in the travel insurance area. So obviously they've been hurt there, but they have a lot of exposure to e-commerce, and so we think they're gonna grow really fast on the e-commerce side. We think we've got a couple investments in the healthcare sector, and we're seeing incredible action there, as I mentioned. And we have also I alluded to before, that fitness category. We have a AI company that actually a company founded by the guy who founded Google Maps here in Sydney. Many people don't realize that Google Maps was invented by a Australian founding team. I mean, there was international people on it, but that one of the co-founders of Google Maps now lives in New York City, and we backed his company that it's called Weave, WEAV, and they have a fitness app, AI engine. And so extraordinary AI technology. So that's another one that we think will do well. Yeah, I mean, frankly, we're very fortunate. I think that most of our companies have exposure in a positive way to the crisis, and we're also trying to see what we can do to help. So one of my companies, in fact, the two healthcare companies are both developing COVID-related products that they're going to just put out in the market and give it away for free. So one of them, I'll just give you one example, has an AI nurse for chronic disease management, and they're working with all the big tech companies and health companies to open up the chronic nurse for free to anyone with COVID, because as you know, the comorbidities, like is really where the real danger for mortality comes, is when you have a chronic condition like diabetes or heart disease, or you're obese, or whatever the chronic condition that you have is, and then you get corona. That's when the people die. And so our company has this amazing AI nurse, which has independently been demonstrated to have comparable health outcomes to a human nurse, if you can believe it, just through the chatbot AI. And so for COVID patients, they're just going to, anyone that wants to distribute it, give it away in their app, they're going to open that. And in a matter of just a few weeks, they created this COVID diagnoser using their diabetes prevention diagnoser. Under a minute, they can have the AI chatbot figure out if someone is likely to have COVID or not. And that way they can triage out the worried well and the people that just have a flu, and have a pretty high hit rate. The 10% of the people that are coming in with COVID potential symptoms, maybe only 1% out of that 10% have COVID, but they can at least get rid of the 90% so that the doctors and nurses can focus on people actually with COVID. So that's an example of that one we're just giving away for free. Just figure out the money part later. But it's more of a just the right thing to do.
Yeah. Intriguing. Back to sort of medical side again as well, right? So that's great. Look, perhaps finally, one more question for you. I'm intrigued, and I've never asked you this question, and we've met numerous times and spoken a lot, mostly about FinClear, of course. But you're involved in Barack Obama's 2008 campaign.
Yeah.
I think you're on the finance committee there.
Yeah.
Give us some insights into that. How was that? And then perhaps, from a bipartisan perspective, give us a view on this election coming up, 2020, and we touched on it earlier, that the angst we're seeing at the moment between the president and the states and red and blue. But give us some of your thoughts and overview there, Zeb, because I know I'm intrigued.
Sure. Well, yeah, I got to know Barack Obama when he was a state senator in Illinois, and we had a number of investors, big Democratic people in Chicago that I went to a lunch, and somebody said one time I was in Chicago, and they said, "You really should meet this guy Barack Obama." And I'm like, "Okay, who's that? A state legislator? I don't, And they're after the third person said, "There's this guy Barack Obama. You really should meet him. You really enjoy meeting him." I'm like, "Okay, this is too much to be a coincidence. I better meet this guy." And so I took a lunch with him.
Had lunch with Barack Obama.
Yeah, when he was a state senator, and I was like, doing a favor kind of a thing. I'll raise him some money in California, and I just never met anybody like him. I mean, I was completely charmed. I was swept off my feet. I was leaving the lunch saying, "How can I help you? What can I do? I want to raise money. I want to write a check. You have to run for, national office. Like he just blew me away. So that began the relationship, and I hosted his first, I guess it was after Steven Spielberg, I hosted his second fundraiser in California after he announced his presidential campaign. I helped him get into the Senate, and then I'll never forget the moment. The last little anecdote I'll tell you is we were in Chicago during the primary, and his was always like the long shot, bid against Hillary Clinton of all people. How was David going to defeat that Goliath? And I remember we were in this beautiful apartment in the North Shore of Chicago, and there was a fire going, and it was just a small group of people after a fundraiser that we had held, and the numbers were starting to look really good. We hadn't hit the primaries yet, and I remember him saying, we actually might win this thing, and it was like the first time that he actually thought, oh, I could become president. Rather than just sort of this long shot bid. Yeah. And it was kind of a pretty magical journey. But that was a long time ago.
Well, what a great experience. But what about now? What's 2020 holding stores there? What do you think?
Wow. I mean, it's so hard. Normally I could give you I've got, pretty strong opinions and a lot of experience from my family and growing up, and my own experiences working on quite a lot of campaigns. Pretty from the door knocking to the senior levels. But it's just so with the coronavirus, it's so volatile, and with Donald Trump, it's so crazy, and with Biden is so old, and who's he going to choose for the VP? And look, I think that. I think people are going to basically be electing the vice president. I think that they see Joe Biden as a sort of steady pair of hands, but he's getting a bit old, and they're going to be focused incredibly strongly on who his vice presidential pick is. And there's some great candidates. He said he's going to choose a woman, so there's some great governors and senators. A lot of people say Stacey Abrams will be selected. I don't think so, because she just hasn't won. The governor of Michigan, I think, is a potential. My personal favorite is the governor of, I think it's Minnesota, Amy Klobuchar. She demonstrated a real ability to be a fighter in the debates, which is the traditional role of the VP in the campaign. And she had charisma and smarts, and she's never lost a campaign. And so she's got those credentials that a Stacey Abrams doesn't. A lot of people put Kamala Harris up at the top of the list, the senator from California. I think she's more likely to be a Supreme Court nominee if the Dem wins and Ginsburg retires. I think Kamala Harris probably be a Supreme Court nominee, and she'd be, I think, quite a good one. And so look, there's no shortage actually of extraordinarily talented senior women, and many of whom are demonstrating their mettle in this crisis. So I think that pick is going to be, it's always important, but it is, I think, going to be more important than ever in this case, given Biden's kind of age. He's probably not going to run for re-election, and he is a little old and showing some signs of that. And so I think that even for the first term, people are going to be looking very closely at that. So those are some of my thoughts. I mean, I guess another thing worth commenting on, people may find interesting, is the dynamic around whether Trump's going to try to delay the election and postpone things. And there's mixed signals there. I don't know if people watched what happened in Wisconsin. It's been kind of a test lab for right-wing autocracy, where when the Democratic the Democrats are like 60% of the voters in the state, and yet the Republicans have managed to gerrymander and legislate their way out of control or out of losing control. And the most recent example being the governor of the state, in the wake of COVID, said we need to postpone the election because cases were going through the roof. and it was just not the time. And he said, look, we'll do absentee, or we can delay it a month, but we just can't have the election. But there was a state Supreme Court nominee in Wisconsin who was on the ballot, and if they went to absentee ballot, that meant more the Democrats, who tend to be poor and working class. They don't have time on a Tuesday to vote. In America, they hold it on a Tuesday, and they're not organized enough to get absentee. So it would have really favored the Democrat, and the Republicans would have lost the Supreme Court seat and potentially some other seats in the state. And so the legislature overturned the governor's ban, and people had to go vote. Well, as a potential harbinger for November in a swing state like Wisconsin, which Trump really has to win in order to become reelected, it's one of really only 3 or 4 states. The Republican favored incumbent lost, and Wisconsin is like one of these states that goes by a few points, and they lost by, like, I don't remember, it was like 10, 20 points. So, the people in politics, they always it's like the people looking at like the liver in the old days, or the stool of the emperor or whatever, like trying to divine the tea leaves. The people that focus on this sort of stuff really look at these elections as we get closer and closer to the national election for a window into what the mood of the electorate is, and that was a massive wind in the sails for Democrats. So I can talk a long time about this kind of stuff, but that's a little bit of.
We may need to draw a line under that for now, Zeb. Hey, listen, it's been fascinating, mate. It's been fantastic to catch up and have a chat with you.
Thank you.
I think I've taken 3 things out of this. I mean, the first is that periods of disruption and volatility. Out of that come great companies. There's a mountain of capital out there to be. Secondly, there's a mountain of capital out there to be deployed. And then thirdly, great to hear about some of the opportunities, particularly FinClear and the fintech sector. But really, what we've heard most about today is perhaps the medtech sector and what's going on there. So look,
I think that's a great wrap.
Yeah. Thank you very much for your time. It's been fantastic chatting, and look forward to hearing more from you soon.
Okay, thank you. Pleasure to do.
Thank you.
Bye-bye.